Before we start, one thing needs to be clear. This video is not about hype. It's not about promises. And it's definitely not about selling you a dream. Our goal is simple. To show real testing, real data, and real trading behavior. The things most people never show you. What you are looking at right now is a test environment. A trading bot running on gold, XAUUSD inside MetaTrader. This is not a screenshot of profit. This is not a single lucky trade. This is a sequence of trades over time. And that difference matters. Because if you've been in this space long enough, you already know the pattern. 99% of bots you see online are presented the same way. One clean curve, one perfect screenshot, and zero context. No drawdown. No equity swings. No risk explanation. Just look how much it made. That's exactly why we do it differently. Let's first talk about what you're actually seeing. At the top, you see the price chart. That's the market itself. Candles moving in real time, sometimes clean, sometimes messy. No market moves in a straight line forever. At the bottom, you see the equity curve. And this is where most people stop showing you things. So let's explain it properly. Balance is simple. Balance only changes when a trade is closed. It does not care about open positions. Equity is different. Equity is your balance plus or minus all open trades. It moves constantly while positions are running. This means equity shows you the truth in real time, not the polished version. If equity drops sharply, it means open trades are in drawdown. If equity rises, it means positions are moving in your favor. This is why serious traders look at equity, not just balance. Now let's talk about drawdown or DD. Drawdown is the distance between a peak and the lowest point that follows it. In simple words, how much the system goes down before it goes up again. Drawdown is not a bug. It is part of trading. Every system has drawdown. Anyone telling you otherwise is lying or hiding something. What matters is how deep the drawdown is, how long it lasts, and whether the system recovers. A shallow drawdown with recovery is healthy. A deep drawdown without control is dangerous. And this is exactly why showing equity curves matters. You'll notice something important here. The equity line is not smooth. There are drops. There are recoveries. There are pauses. That's normal. What's not normal is pretending those things don't exist. Now let's talk about margin. Margin is the amount of capital locked to keep positions open. Free margin is what protects you from liquidation. If free margin drops too low, you get margin calls. And after that, forced closures. Most flashy bots never talk about margin. Why? Because margin management is boring. And boring doesn't sell dreams. But boring keeps accounts alive. A system that ignores margin might look great, until it doesn't. Now let's talk about something most people underestimate. The psychology of drawdown. Because this is where most accounts don't fail technically. They fail mentally. Drawdown is not just a number on a chart. It's pressure. It's doubt. It's fear creeping in slowly. At the beginning, a small drawdown feels acceptable. You tell yourself, this is normal. And it is. But when it lasts longer than expected, something changes. You start watching the chart too closely. You refresh the terminal more often. You stop thinking in probabilities and start thinking emotionally. This is where people interfere. They close trades early. They disable the bot. They change settings mid-cycle. They jump between systems. Not because the system is broken, but because their patience is. Drawdown exposes expectations. If someone expects constant growth, even a healthy drawdown feels unbearable. That's why so many people quit right before recovery. A well-designed system assumes drawdown. It is built with the expectation that losses will happen. What matters is not avoiding drawdown, but surviving it. And that survival is psychological first, technical second. If you cannot tolerate temporary downside, no system will ever feel safe. Not manual trading, not automation, not bots. This is also why most marketers avoid this topic. Because drawdown doesn't sell. Comfort sells. But comfort is an illusion in trading. Real stability comes from understanding behavior, not from hiding risk. When you accept drawdown as part of the process, you stop reacting emotionally. You start observing instead of interfering. And that single shift is often the difference between long-term survival and repeated failure. Drawdown doesn't mean something is wrong. It means the system is operating in real conditions. And real conditions are never perfect. Before we wrap this up, we need to talk about one last thing. Risk management. Because no strategy, no bot, and no system survives without it. Risk management is not about avoiding losses. It's about controlling how much you lose when losses happen. That means position sizing. That means margin awareness. That means accepting that not every trade will win. Most people ignore this part. They focus on entries. They focus on indicators. They focus on profit screenshots. But risk management is what decides whether an account survives long enough to even see results. A system with good risk management can be imperfect and still survive. A system without it will eventually fail, no matter how good it looks at the start. This is why we emphasize structure over hype. So who are we? We are Arc of Life AI. We focus on education, automation logic, and realistic system behavior. Not shortcuts, not promises, not fake safety. Our goal is to help people understand how trading systems actually work, what risks are involved, and what questions they should be asking before trusting any code, bot, or strategy. We don't claim perfection. We don't sell guarantees. We show process. If you want to explore more, all relevant links and resources are listed below this video in the description. Take your time. Verify. Learn. Don't rush decisions. And now an important note. This content is provided strictly for educational and informational purposes only. Nothing in this video should be considered financial advice, investment advice, or a recommendation to trade. Trading involves risk. Past performance does not guarantee future results. You are solely responsible for your own decisions and actions. Always do your own research, and never trade money you cannot afford to lose. Stay disciplined, stay realistic, and stay safe.